viewers, welcome to Beyond Borders. Today's video is regarding the German recession, what the issue is all about and how it affects India. Germany is the world's fourth largest economy. It slipped into a recession in the first quarter of 2023. According to the data published by Germany's Statistics Office last month, the economy contracted by 0.3% in the first quarter of this year. This comes after a 0.5% shrinkage in the last quarter of 2022. A country is considered to be in recession if its economy contracts for 2 consecutive quarters. So how Germany slipped into recession? Germany was known as the sick man of Europe in the late 1990s as it battled with the cost of reunification. But it bounced back strongly and became the economic engine of Europe. But times have changed now. Europe's economic engine is breaking down. Many analysts worry that the German economy could become the black sheep of Europe. So why is this happening? Mainly 2 major factors contributed to Germany's recession: the war in Ukraine and the COVID-19 pandemic. It created a number of challenges for the economy. Massive inflation has paralyzed the consumption growth in the country. It led to reduced purchasing power and decline in consumer spending. Household consumption decreased by 1.2% in the first quarter of 2023. Households spend less on food and beverages, clothing and footwear, and on furnishings. Consumers also bought fewer electronic cars as a result of reduced incentives. The decrease in consumer spending was due to the shock in energy prices. Government spending significantly decreased by 4.9%. That again contributed to the economic contraction. Heavily reliant on Russia for energy imports, the Russian invasion of Ukraine was one of the major factors that affected Germany's economy. Supplies were cut off and prices soared. The energy crisis has also had a direct impact on the industries. German industries were forced to scale back production at the end of last year because of energy prices that reached record levels. Hence, Germany had to buy more LNG, which is more expensive than the Russian gas delivered by pipeline. To solve the energy crisis, Berlin resorted to imposing a power price cap for some energy-intensive industries. But that decision further worsened the country's inflation problem. It is believed that the subsidies in fuel prices to some industries could cost taxpayers as much as $32 billion in the next 7 years. The country has already shut down its nuclear power reactors and plans to shut down its coal-fired power plants by 2030. However, its transition to cleaner mode of energy production has been very slow. Although there is a plan to install 625 million solar panels and 19,000 wind turbines by 2030, it fails to cope up with the rising demand of energy. Germany's economic growth depends heavily on exports, especially to China, where Volkswagen has been the dominant automaker for years. But a recent surge in the popularity of Chinese-made electronic vehicles caused Volkswagen to report a drop of 15% in sales in China in the first 3 months of the year. The country's trading partners imported fewer products from Germany than usual due to geopolitical turbulence, high inflation rate, and loss of purchasing power. Germany is Europe's largest economy. Its health directly affects the health of 20-member Eurozone and the wider European Union. But how it will impact the world's 5th largest economy, India? According to experts, India's export to the European Union are likely to be impacted adversely. In the last fiscal year, India's export to Germany amounted to $10.2 billion. This figure is expected to dip as a result of the ongoing recession. The most affected sectors would be apparel, footwear, leather products, chemicals, and light engineering items. The soon-to-be imposed carbon border tax by Germany will also impact the export of iron and steel products. However, German investments in India may not be significantly affected, as German companies often seek cheaper alternatives during recessionary conditions. Despite enduring a recession in the first quarter, Germany shows signs of hope with growth in investment, construction, stable trade, and a positive outlook for the future. Now, the question is whether there will be any recovery in the second half of the year. The European Commission is predicting that Germany will be the bloc's weakest member in terms of economic growth this year. Economic analysis company Sendix conducted a survey between June 1st and 3rd on investor views on the 30-member Eurozone. The result indicates growing pessimism among the investors regarding the Eurozone's economic prospects. It is predominantly influenced by the concerns surrounding the German economy. As investor sentiments plays a crucial role in shaping economic performance, these findings suggest that the Eurozone may face further challenges in the near future. Hope this video is informative. Keep watching.